Welcome to Larkin-Gowan Insights, accountancy and business advice for all, a series that gives you bite-sized tips and guidance on tax, funding, legislation, reforms and much more. With case studies, business advisory and sector specials and even interviews, our team of experts are committed to helping you navigate the world of accounting and finance, with a variety of presenters from across our specialisms. So, let's get on with today's show.
Welcome to this special mini-series, Beyond the Barn, the Business of Farming. I'm your host, Laura Clayton, an Assistant Manager in the Farms and Rural Business team. In each episode, I invite a different guest to share their expertise on an array of different business topics that affect the farming and rural community. We cover tax, obviously, legal matters, succession, inheritance, and much more. We go behind the scenes of how we support our clients and hopefully give you some tips along the way. Today, I am joined by Arabella Woodruff. Hi, Bella. Thank you so much for joining us today. Please, could you quickly introduce yourself?
Hi, I'm a manager in our Farms and Rural Business team. I've been with the firm for nearly 9 years. I'm from a farming family myself, and I deal with a variety of different size farms and their accounts and tax planning.
So today we are going to be talking about financial management and effective budgeting. Quite a broad topic for us to sort of be getting into. So Should we do it?
Yeah.
So it's also, like I said, it's quite a broad topic. A lot can kind of come under that. What would you sort of, define it as?
I think, in short, financial management is probably sort of your monitoring, your planning, and controlling your business finances. And it's all about being aware of what's going on in your business to make sure we can make informed decisions. For example, whether it's financially viable to purchase a tractor, or if we're needing a new combine, the best way to finance it. The planning sort of tends to ensure that the companies can afford to do it and, they're financially stable and profitable. It covers a range of different things, including budgeting, cash flow, profit forecasts, and can take many shapes and forms.
So a lot there then. And I think from my experience, I think some of my clients do that, some of it, all of it, none of it. I think some of my clients don't necessarily know it's there or how it's there to help them. One of the things you mentioned was sort of budgeting. What would be the benefits of budgeting, if our clients were to use that tool?
I think, as I mentioned sort of previously, and I touched on it, it's about making those informed decisions. So if you've got your budget set up, you'll be aware or have a better idea of where your financials are expected to be in the next year. I think you sort of hit the nail on the head. Some people are very good at doing this, and some people don't do any budgeting at all. The budgets allow us to then look at sort of budget the actuals. I think a lot of the time we can be focused on reviewing a year-end set of accounts and seeing what's happened a year ago, whereas actually your budgets can allow you to look at some really real-time information and, we expected to sell our wheat at this amount, but the market's changed and our cash flow is now changed and our future income is now not what we thought it was going to be.
So I guess budgeting allows us to be proactive rather than just reactive and look what's happened, and we can try and get ahead if we sort of feel we need to.
Yes, definitely. It's an early indicator for a lot of things. For example, tax bills is a massive one. I have some clients who will be in contact with me at January time if their year ends March, and we'll review an expected profit, which allows with us to look at tax positions, and then it gives us time to tax plan, as opposed to finishing a 12-month set of accounts and then going, we've now got this tax bill that we need to cover, whether that's sort of a personal tax bill or corporation tax. That budgeting just allows those early indicators to do that planning side of it all.
One of the things that I picked up there was you mentioned the sort of timeliness and planning of it all. I know, for example, in July, payments on account, we have a lot of clients that like us to review those ahead. And, there's no reason why that has to be done the week before your payment is due. We can, if you've got a March year end, we can look at those first week, April, as soon as the data is ready for us. What would your thoughts be on that?
Yeah, I think, it's the payments on account, the personal tax bills and the corporation tax bills. The budgeting helps us identify those problems before they occur or before they become an issue. there could be potential cash flow difficulties depending on how a harvest is or what the fertilizer costs are. And actually, if we've got time and we know what those potential tax bills are going to be, like I said, we can reduce them if we've got the scope to prior to July, or we could, for example, maybe apply for a short-term loan rather than go into an expensive bank overdraft. And that budgeting just gives us that wiggle room to do that planning rather than, oh, we've got no money and we've now got large tax bills or big expenditure.
And if we leave that to the last week, then our options are very limited to what we can do, as suppose if we'd done it a lot earlier.
Yes, exactly.
And then the other thing I sort of picked up as well is you mentioning reviewing the budgets. How often should our clients be reviewing these?
At least once a month. We've got 12 months of the year, and budgets will tend to be done in sort of months, January to December, or in line with your financial year, maybe April to March. However, farms obviously have quite a lot of fluctuating income, and their income and expenses, as we all know, can go up completely out of our control. So it may be worthwhile looking at them bi-weekly or even weekly against those monthly budgets, just to see, have we exceeded where we thought our income or our expenses were going to be, or are we well below? Because, as I said, we never really know what the commodity prices are going to do, and that can affect our sort of budget versus actuals quite a lot.
Yeah, some very good points there. I think these can be obviously a very good tool, but I think for them to be useful and helpful and help make these decisions, they've obviously got to be, the data's got to be right in them as well, so they're effective. It's all well and good having a budget, but if the data is useless, then we can't make a good decision on what's going to benefit the business. But how do we get these budgets in a place where they are effective and, so that they do make a good, useful tool?
I think it kind of goes back to the question before. They need proactive monitoring. There's no point putting this budget together and then not reviewing what it actually says or how the business is performing against it until 12 months down the line. So I think for them to be effective, proactive monitoring is definitely key. I think also flexibility to adapt. I don't think we can set a budget, especially in this industry, and expect that to sort of be the budget for the year. I think we need to adapt them with what changes in the market. I think we also need to plan for the unexpected. I think it's quite easy to potentially budget for the best case scenario. However, the best case scenario, if it doesn't happen, we may end with cash flow shortages, difficulties paying suppliers on time. So I think for them to be effective, we almost need to have a best case, worst case scenario. So we know down the line our cash flow positions are going to be okay. And I think you sort of said it perfectly, that if the information going into them is made up and isn't based on maybe historic or current or future trends, they're not going to be very useful at all. They need to be realistic, and I think that's the main sort of point with budgeting.
Absolutely. And I think it's useful as well that we can look at budgets as a whole for the business, but equally we can look at them individual enterprises. I know now a lot of my clients are starting to diversify or have diversified. So one problem area, it might not just be the whole business, it could literally just be one enterprise. And if we're proactive and look at those budgets, we can spot where the problem child is as such, and then put the attention there rather than sort of looking back at a whole year, the whole business.
Oh, absolutely. I think especially with the software capabilities now, we have the ability to enterprise report, so you can see how your farming trade is going, or potentially your furnished holiday let or your farm shop. And I think sort of breaking those budgets down into enterprises really helps us target those key areas. Or actually, we're expecting the farming trade to not perform so well this year. We've had a very dry spring. However, the farm shop's really selling off because everybody's gone out and come to the farm shop because the weather's good. And I think that enterprise reporting, in terms of fine tuning how a business is running, is so important.
Yeah, agree. And with that, I guess as well, if we're planning and looking ahead, it might be that actually we're expecting sort of a poorer time for the farm shop, like you said, for seasonal trade or whatever, or weddings might be quieter in a certain in the winter, that sort of stuff. So it can make sense if things aren't going to plan as well. But if we're budgeting and looking at that we're expecting those things and we're ready for them, so that perhaps we can put other things in place.
Yeah, exactly. It's the awareness, I think, of, I don't know, I think it's easy to talk about the problems and say, oh,
Yeah.
if the farm shop's not done well, or if
Yeah.
the barn's not booked out for weddings. But it also helps us see where there's potential opportunities, and actually, if cash flow does look to be positive, maybe that project or that investment that we've wanted to take on to set up maybe a new diversification or purchase a new tractor that we've been needing on the farm, it also highlights that opportunity to the business, and actually we can invest and we have got this capability.
That's very true. And it comes back to what you said, it helps make business decisions, good and bad, and that could be a real sort of positive step.
Yeah, definitely.
You also mentioned cash flows before. Could you sort of go into a bit about those?
Yes, I think cash flow is always an interesting one. And, I do cash flow forecasts for some of my clients. As we said, earlier on, we never know quite where maybe fertilizer prices are going to be, or where, for example, sugar beet prices might be one year to the next. So I think cash flow is very difficult in this industry. And I think when we talk about cash flow, it's, we're not buying the same thing year in, year out, and the government might change the rules, so we suddenly can't purchase something. You never know. It's an industry that's always changing. But the cash flow forecast can help us see where those sort of downfalls and those low sort of cash points are. And I think we're all aware with farming as an industry that when we're purchasing a lot of fertilizer, we've got a lot of cash outflows, and we may be waiting a couple of months until our crop sale income comes in, or our divisible surpluses come into the bank. So I think cash flow forecasts can help us get a good idea of when we can afford to make that expenditure. But also, like I said, if we've got those shortfalls in cash, looking at cheaper ways of financing that shortfall, as opposed to maybe relying on sort of more expensive methods of borrowing money, and hence, helping future cash flows and keeping the pennies in the bank where we want them.
Exactly. I think you hit the nail on the head there. I think the farming industry is probably one of the industries that it changes all the time and so quickly, and it's never, consistent in a bad way, but it's never, oh, that happened last year, the same is going to happen this year. So I think it's always good to keep stock and, like you say, assess those things. I guess cash flow allows us, again, a bit of planning to be able to do that.
Yeah, definitely.
We obviously try and work as closely as we can with our clients, and that's a very important part of our jobs. But what can we do, to work with them, to help them with budgeting, financial management, all the stuff we've covered?
So we can help our clients by creating budgets based on historical data. A lot of our clients we've acted for a lot of years, and we can review what the average crop prices have been, or what the average yields have been for cropping. We can't decide on the crop rotations. We're not going to be making the agronomist decisions for our clients, but by communicating with our clients and getting the information, for example, on what they are planting that year, we can then create these budgets, profit forecasts, cash flow forecasts, to reflect those. And also, we're aware of future trends, tax rates, and we can factor all of that in. We can provide these forecasts, but also discuss them with clients. What do they actually show? I think, as we said earlier, there's no point having a budget if you're not going to look at it and use it. And those conversations, I think, could be really helpful to business owners.
So we've covered quite a lot of this from a business point of view, and how that can affect an individual's tax position and what we can do there. But dare I say it, I feel like this is a bit of a curse word in our industry now. We obviously had the budget that came out in October, which had a few shocks in, I think, for our clients. I think that's fair to say. And IHT was heavily impacted. Is there anything that our clients can do, by looking at budgeting or financial management now to help them with their positions?
Definitely. I think good budgeting and financial planning can help reduce IHT liabilities, so we can pass more wealth on to future generations. There's there's budgeting gifts. I think there's a lot of discussions on gifting, whether that be a small gift of £250 or your £3,000 annual exemption. But we can budget these into individuals' personal budgets. And looking at that, we can't gift if we haven't got the financial availability to gift. So it's budgeting to ensure we've sort of retained enough to live on whilst reducing taxable estates. I know for a lot of clients, we have sort of forecast potential IHT liabilities based on current and new rules, which again, it helps people plan and review, do I need a life insurance policy? Do I need to have a look more in depth of gifting while I'm alive? But without budgeting, without reviewing that position, I think it's very difficult for people to comprehend where they may be in obviously the sad case that there is a death.
100%. And I think IHT planning in particular is quite a complex subject as well. As you mentioned, it's not just about tax savings. There is succession elements to this. There is, parts of we need to make sure that yourself is looked after, but with gifting as well, it's that balance of striking of what the business needs, what you need, what they need, and what is the most efficient way. It's not just a case of shifting it all down straight away. It's the timeliness and, like you say, planning of that.
Definitely. And I think that's where we can play about with budgets, whether it's inheritance tax or maybe looking at taking out a loan for a new tractor. We can factor those into budgets. It doesn't have to be something that's going to happen necessarily for us to budget for it. We can budget expected. So if you did have a company, for example, that you're going to sell some of your shares or gift some of your shares, we can review how a reduction in a dividend would impact your income and your personal tax bills, and actually whether that is suitable to help you. And I think that's one brilliant thing about budgeting, is we can make the budgets work for exactly what you want. They don't specifically have to be for a business or a project or inheritance tax. It can be for one or both or all of them working together. And actually sometimes budgeting from different perspectives can really help people make informed decisions as a whole. Like you said, when we're making decisions, it might not just be for the family farm, but yourself, but also future generations. And it's important that we review it all as sort of one big picture.
Yeah, completely agree. And I think the other thing you mentioned, which is also really important, is that actually just because you look at these decisions or options on the table doesn't mean you have to do them. It's literally simply having a look at what the implications are and whether that suits. And you can equally say, yes, that works, or no, that doesn't. But like you say, by working with us, we can help you hopefully get to that decision point.
Definitely.
Thank you, Bella. I think that was really useful and some brilliant takeaway points there. So thank you very much for joining.
No worries.
If any of our listeners have any questions or queries, please do not hesitate to get in touch. We'd love to hear from you. Our contact details will be in the show notes.
Thank you for joining us for Larkin Gowan Insights, Accountancy and Business Advice for All. Don't forget, you can find more information about today's topic and more about how our team of experts can help you in your business by visiting our website, larking-gowan.co.uk. Join us again next time for another fascinating insight into the world of accounting and finance.